I'm gonna be straight with you guys. LLC is what you want. You need to form an LLC first, and then once you're making more than $50,000 a year in profit, then you turn that LLC into an S Corp. In this video, we're gonna talk about the differences between LLCs and S Corps so that you can understand when it makes sense to even use it, because they are a great way to save money on taxes. The first thing we need to understand is that an LLC is an entity and an S Corp is a tax status. So you can't just go form an S Corp. It doesn't work like that. You first have to form an LLC and then get it taxed like an S Corp. So then you might be saying, well, Evan, when I form an LLC, what is it then? How is it taxed? When you form an LLC, it's taxed as a sole proprietor, which means a regular person. So you're telling me LLCs don't affect my taxes? That's right. When you form an LLC, it does not change the way that you're taxed. All it does is provide a way for you to separate the business from yourself. So if you really think about it, I just go outside and I start selling t-shirts on the corner. I've gone into business whether I like it or not. I am considered a sole proprietor in the eyes of the government. A lot of times I don't want my personal assets to be at risk in case I make a mistake doing business. And I don't want my business assets to be up for grabs if I make a mistake personally. And what I mean by up for grabs is if I get sued. When you get sued, the judge issues a charging order and will basically say, all right, you can go collect from that person now. Well, if you have an LLC separating the business from yourself, they can't go and take from both pies. You know what I mean? The LLC separates the business from you. So if your business gets sued, they can only go after what's in the business. If you get sued, they can only go after what you own. And so it puts a layer of separation there. That's what LLCs do. So when you form an LLC initially, you separate the business activity from yourself, but you're still taxed like a normal person. In fact, the government's gonna look at everything that you earned with both your person and your LLC. They're gonna lump them all together. It's gonna go on one tax return, and you're gonna owe taxes based on the total amount both things earned. If you own 10 LLCs, combine all of that income together, it's still going on one tax return. You're still gonna pay taxes on everything that everybody earned combined. You might be saying, Evan, why are you talking about taxes so much? Like, I understand, LLCs don't change the way that you're taxed. Why do you keep bringing it up? And that's because S Corps save you money on taxes because they are a tax status. Just so we can be crystal clear on this, the items on the left are entities. The items on the right are tax statuses. When you form an entity, you have to choose a tax status. And if you don't choose a tax status, one is assigned to you automatically. For example, when you form an LLC, you're automatically taxed like a sole proprietor. When you form a corporation, you're automatically taxed like a C Corp. So how do you become an S Corp, and why would anyone even want to do it? There's this thing called self-employment tax, and it's 15.3%. That 15.3% gets collected from you, the business owner, and then the government uses it for Social Security and Medicare. That's on top of your state income tax and your federal income tax and sales tax. So there's 4 taxes. S Corps help us eliminate most of that 15.3% self-employment tax. But how? Well, in the beginning of this video, I told you wanted an LLC. Why? Because that's the foundation for S Corps. Let's step back for a second and break it down from a fundamental standpoint, okay? You're starting a new business. You don't know what to do. You need to go form an LLC in the state that you're doing business in. Then you need to get an EIN for that LLC, which is like a social security number for it. You use those 2 things, LLC paperwork and the EIN, to go open up a business bank account. Now you've effectively separated the business from yourself. But remember, it's all on one tax return, and you're still paying self-employment tax. So what's the next step? The next step is to earn as much money as humanly possible. All of that money is going to go into your business bank account. When you earn more than $50,000 a year, or $4,000 a month in profits after all your expenses, then it starts to make financial sense to turn your LLC into an S Corp. It doesn't make sense until you're making at least 50 grand, because forming an S Corp isn't going to save you a ton of money if you're making less than that. Here's some back of the napkin math for you. If you're making about $50,000, switching to an S Corp will save you about $7,500 right away, as soon as you do it. That's a pretty significant tax savings. If you're making $100,000, forming an S Corp will save you about 15%. $15,000. So you're telling me that I can take my LLC, submit Form 2553 to the IRS, start paying myself differently. Now I'm an S Corp and I can save money on taxes? Yes, That's exactly what I'm telling you. But why 50,000, Evan? Like, why couldn't I just start it from the beginning? Here's why. When you're an S Corp, you're required to do things just a little bit differently than you were before. For example, when you are an LLC taxed as an S Corp, you have to put yourself on payroll and take a reasonable salary. That's literally what the IRS says. You must take a reasonable salary. Okay, so we understand we have to put ourselves on payroll. Okay, that's the first thing. The second thing is when you're an LLC taxed as an S Corp, you have to take distributions, which is simply a bank transfer from your business bank account to your personal bank account, but you have to do it in combination with your salary. You have to treat yourself like a real business. Third thing, you're gonna need a CPA to file this additional S Corp tax return for you. You're gonna need someone to make sure your forms were submitted correctly, your payrolls run on time, your books are updated, and all of your S Corp stuff is dialed in. That person can be you, but I don't recommend it. I recommend a trusted professional. And if you need someone, please reach out to me. I also have a big list of trusted accountants and CPAs in our accelerator program. Wait, hold on, Evan. So you're telling me that when I become an S Corp, I have to pay myself differently? I can't just transfer money from my business account to my personal account and take owner's draws anymore? No, you can still do that. It's just gonna be called a distribution now. But you also have to take a salary. And the government says a reasonable salary, so you can't just take $1. So you need to figure out how much money you're making over the year and put some money aside into a payroll account so that you can pay yourself with it and have regular paychecks sent to you on a monthly basis. Do you see why it makes sense when you're making more than 50 grand a year? And that's because there's costs involved. Not necessarily costs to professionals, but costs for you. You have to start taking a salary. That means you got to put money in a payroll account. That means you need to get payroll software. That means they need to have money ahead of time to pay you with it. That means you also need to take distributions. So you need to have a little bit of a pool of money in the beginning to help with that. The only exception, I would say, to this rule of making more than 50 grand a year is if you are a 1099 professional, like an insurance broker or a salesperson, and you know that you're gonna make more than 50 grand a year. Then just go ahead and set up the LLC, the EIN, the S Corp, and the bank account all in one step. That's totally okay. Now, this setup might seem like a lot, but what's important to understand is that LLCs and S Corps work together. They're not separate things. When you form an S Corp, you're actually forming an LLC taxed as an S Corp. These are lessons that I go through in great detail in My Accelerator. It's a training program and a community where I host all of my video trainings, including a bunch of videos on how to form your own S Corp. So let me sum it up for you. Start by forming an LLC. When you get to a point where you're making more than $50,000 or more a year in profit, change the tax status of your LLC to S Corp. Now you can start paying yourself differently. You can start taking a salary and distributions, and this will save you 15.3% on self-employment tax. How does an S Corp save us money on self-employment tax? Like, I don't get it. Well, when you become an S Corp, the salary that you're paying yourself, that paycheck, it becomes a tax deduction for the business. So it becomes a write-off for the business because the business has to have employees to manage it in order to exist. So that salary is now a write-off for the business. It's only taxed when you get it as a person. Not to mention, self-employment tax is broken down into two parts, the employer portion and employee portion. When you're an employee, you're only responsible for the employee portion of self-employment tax, which is 7.5%. Roughly. When you're an employer and you employ somebody else, the employer is only responsible for 7.5%. So they split it. But when you're a sole proprietor, you're both the employee and the employer. So you have to pay all 15%. So what we're doing with the S Corp is we are shifting the tax liability. So we make that salary a deductible expense. And of that salary, you only have to pay 7.5% on the money that you're taking. Now, when you transfer money to yourself in the form of a distribution, S Corp distributions are not subject to self-employment tax. So it saves you a ton of money right off the bat. It doesn't save you a ton of money on the salary side of things, aside from being a deduction for your business. But when you take money out of your company to pay yourself and you don't have to pay an extra 15%, it is a big deal. And this works all the way up until about the $250,000 mark in earnings per year, where it reaches its cap. And then we can start employing additional, more advanced tax-saving tips. If you like this kind of stuff and you like the way that I teach, I would highly recommend checking out My Accelerator. I have a whole section on S Corps in there because this is my wheelhouse. I'm obsessed with helping previous versions of myself figure out this stuff that I had to struggle through. So I created an accelerator, a place where people like you and me can get together. We can talk, we can go through all of my video trainings, you can get access to all of my people, get my legal documents, and we can DM each other. I even go live every week so that we can do group coaching and talk and really become a tight-knit group. I'll leave a link in the description below if you're interested in checking that out. No pressure, I just want you to know that it exists. In the meantime, check out this video next, because if you enjoyed this video about S Corps, you're gonna love this next one.